Hello, traders. This is Blake Morrow. You are listening to the last daily roundup of 2020. Wow, can you believe it? It has been that kind of year. And as I didn't say this on the face webinar because not everybody there on the face webinar is, a client or a family member of ForexAnalytix, but you guys are. So I want to say thank you so much for your continued support throughout a really tough year for most of us. I always try to take a step back and say, well, things could be worse, which they could. Health wise, my family and I, for the most part, we've gotten away unscathed at this point, from like COVID, so that's good. But trading, and you've heard me mention this maybe a couple of times over the last few weeks. It's been an up and down year, and I'm really looking forward to this next year in the markets. I am. I think 2021 is going to be a great year for trading. It's going to be a great year for currencies. And I want to thank you all for sticking with us throughout this tough year. And I know next year is going to be great. So, and you've heard me explain the reasons why. I think a lot of them is going to be due to, interest rate expectations starting to move based on inflation expectations, going into this next year. Plus, we don't have to worry about, random tweets throughout the course of the night or weird hours. So that's good. But those types of things are going to be the things that drive the currency markets next year. And I think you're going to see a lot more money come into currencies because institutions are going to be able to take on a little bit more risk without some of the, the risks of those moves that might have, derailed some trades. So anyway, let's talk about it's like I said, it's the last day of, well, it's not like the last day of the year. Tomorrow the market's going to be open for like a half day. So I plan on being out of everything. Well, not everything, but plan on having very reduced position sizes for the next, few days, which I think is important. This way I don't have to fret. I'll keep my positions relatively small, so I don't lose any sleep. That's going to be the important thing. I want to be able to celebrate the new year, but I want to point out how many key levels are being tested right now in the market. So let's talk with the euro dollar. So the euro, you probably seen, I put in a pattern in play. That's because we are now. I know we're above the 161% extension. This is the big 161% extension of this consolidation. I know we are past it and we're above it, which is fine by me because what we did hit today is the 127% extension of this last move lower. So I don't mind being on the short side of the euro here. As long as we stay below 123 and change, I'll stay short some. And you can see how divergent the relative strength is. So I think that we're going to eventually roll over there. Take a look at the cable back at key resistance here. Now, I don't know if I'd want to be on the long side here. I'm not shorting sterling right now, although I don't think it's too bad of idea. Maybe against some crosses, but I think if you're long, you just have to be a little careful. But we did get a Brexit deal, so it's the buy the rumor, sell the news. Maybe that was it right there, and now it's they're going to be buying sterling moving forward. Could be the case, but it is holding up pretty well here. But we are at some resistance. The Aussie dollar, we hit the 161% extension of this consolidation, and remember we're above the 38% retracement long term. Now I am short a little bit of Aussies, just a small position, but I don't mind being short here. I think we might have an overshoot. Relative strength is divergent, it's overbought. So, I think it should come down a little bit, but stocks continue to hold up pretty well. It's the end of year, and we're in the middle of a Santa Claus rally, so it's hard to stay aggressively short the Aussie. Let's just put it that way. Kiwi, We are almost at that 127% extension. Matter of fact, we're at highs right now. We might push one more high here to 72.16 before backing off, but big resistance here in the Kiwi coming up. Okay, remember we are above the long-term 50% retracement as well. Dollar Canadian eased off towards the 78% retracement. It, was holding up really well. There's, an escalation in the Middle East around Iran I don't think it's out of the question. And I think that might have some traders putting on some Canadian exposure just in case there is some military type of action over the weekend. If there is, I would expect a big move higher in crude oil, big risk off move, but the Canadian might be more of a safe haven. So you got to be a little careful with it here. I still have a position in the dollar Canadian. It is underwater at this point, but I'm not going to get excited about it until we get back above 128.30, 128.50. But you can see we're still, I still think, minus any, military action, I still think we're in a more of a range here, more of a range while we're below 129.50, but above 127. Dollar Mexican peso had very similar price action yesterday and today. Spike up and then we eased. Spiked up and looks like we might ease again. But we should have some support in the dollar Mexican peso down at 1980 once again if we make it there overnight. And one of the big holds that happened today is the dollar yen, and I don't have any exposure. I know Amanda was playing it off of the support, but it held 103, and we bounced. Again, you guys know I'm so unexcited about the dollar yen. I have no desire to trade it, but I do have to recognize the fact that we did hold support. Now that factors into the dollar index because the dollar index is near that 161% long-term extension. I think if the dollar index can get back above 90 over the next 24 hours, I think people that are short dollars might second guess their decision making. So just keep that in mind as we go into the next couple of days. Now the S&P continuing to grind higher, and as long as we're above 3,600, or at this point, well, it's really above 3,600, but still this trend line here comes in at 3,640. So while we're above there, risk is still on, and we've moved higher the last couple of days and continue to hold up pretty well. Although seems like the Nasdaq's diverging a little bit away, little bit here. Something to keep in mind is that has been leadership in the past. Alan said, "Hey, it's been a blast. Great team all around. Thank you, Alan. And you know what? It's really a pleasure of ours to have you part of our family. So thank you so much. And guys and gals, again, I'm going to reiterate. Thank you so much for your support. And I'm really looking forward to next year. I do think that next year, one thing that you can just kind of get out of the way of, you can get out of the equation is just worrying about random tweets. And those random tweets that come out from, President Trump, they move the markets, whether you like it or not. And it's hard to establish big positions in the market when, he could say anything or tweet anything at any time of the 24-hour period. Maybe there's a 4-hour block of time where he's going to be sleeping for the most part. But, being able to hold positions, and not have that risk at all times, I think is going to bring back a lot of money to the currency market. I think currencies are going to be more willing, traders and institutions are going to be more willing to take a stand in the currency market again. And that for us as currency traders is awesome. So Alan says, "Thanks, Blake. Happy New Year. Mandalorian was awesome." Yes, sir. This is the way. And it was. Alexander says, thank you for everything, Blake. Happy New Year and see you next year again. I learned a lot with you this year and I hope to continue throughout the next one. All right, Alex. Hey, thank you. And Hugo says, Happy New Year, Blake. Happy New Year to you, Hugo. Good to have you part of the family. All right, guys, have a great one. I'll be in the chat rooms. I'll be in there today and you guys will get analysis tonight for basic technical analysis. And then from tomorrow through, obviously the weekend, you'll just get your normal weekend analysis updates, but we will do a week ahead video, just FYI, but things will resume normally January 4th. So I'll see you guys then. Have a great one. And thank you for being here. And thank you for being part of us, our family. Talk to you soon. Bye.